Hey everybody, it's Booksy. Today's Sunday, December 26th, and this is an update for AMC going into the new week. So we have a long weekend. AMC typically does pretty well after a long weekend, but there's always a first time to sort of surprise us. Looking at the charts today, I largely haven't changed my mind about the bearish and the bullish scenarios going into this week. So if you haven't watched the last two videos, there's a really long one that's like 40 minutes, but I went into, I think, 3 bearish scenarios or something along those lines. And then the last video that I did was the more bullish scenario. And I'm still in much the same boat that I was then. I don't feel like there's that much that's changed based on what happened Friday. I had actually pretty much mapped it 1-to-1 ahead of time. I wasn't really sure about the time frame, and sure enough, this kind of shape right here, this spring, happened pretty early. And I thought originally I had put it like here. I think that was the major difference. So a little off on timing, but it still happened, and it was not in my opinion, it was not much of a surprise. We went into Friday knowing that they were going to try to get the max pain value, which was right around $29. And yeah, and they just kind of moved it around. They hit some touch points, shout out to Father for pointing out that this touch point right here completes the macro spring. So this spring on the whole, coming back up and retesting where the spring started, it's a really big deal. And certainly like that level is the touch point. So that's a big reason probably why we saw that. Bless you. Gonna be on my video. So that's probably why we saw that specific point. I had actually drawn this arc right here a long time ago. I'll talk more about that in future videos, but there's some ideas that I have about the way the stock moves on the algorithm, and there's reasons why I'm drawing some of these things where I'm drawing them. But yeah, so, bearish scenario to going into the week is pretty simple, and that's just that we get an actual sell-off. With flat volume the way that it is, you might be tempted to think that it'd be easy to knock this down. I don't think it would be. I think that we're talking that 2250 really is the low, and I'm not convinced it's ever going to get lower than that. I just don't understand why it would. I know a lot of people are saying, well, if it's mimicking XYZ pattern, then it has to go down and all this stuff. And to that I say that there is reasonable proof that it could be mimicking some certain time frames. And specifically, people are talking about this fractal pattern that I actually talked about in previous videos. I mapped it out a long time ago. And by a long time ago, I mean like a couple weeks ago, right? It felt like a long time ago. And the debate is whether or not that if we're tracking this fractal sequence that happened in 2020, whether this was the peak here or this was the peak here. And there seems to be a division. I've seen a few people post that they believe that this run right here matches this run, and that other people believe no, like the run starts here and it's actually just this little bump, and that's all there is to it. I think they're both right. I think that you have the same fractal sequence here to here as you do from here to here, and that's going to make it really difficult to tell the difference. I think if you're looking just at volume, the case for this region is very strong. Yeah, I mean, look at you can see the similarities. Let me get this on a smaller time frame. It's just on 15-minute, for example. Yeah, I mean, you can see the similarities in these kind of spikes and both, buying and selling volume. So I certainly see why someone would make the case that, yeah, Monday we're bouncing, we're just right here, we just did this move and we're ready to go down. That this was like the U, okay, and yeah, then we're gonna just start tanking, and we're going to go all the way down to, the nether regions, okay, below the previous bottom. I have a couple major reservations about that. Number one, if we were to do that, the question is why? Why would the institution want to do that? The reason that you drive a stock into a spring, a terminal spring like it was, is that you're trying to absorb volume, like you're trying to shake out paper hands, you're trying to accumulate. You basically tested supply and demand in this region, exhausted it, and then you're pushing it to bring back in supply, right? You're basically kind of putting a defibrillator right on the stock and bringing it back to a volatile state. Sorry about that train, it's super loud. But yeah, I mean, so yeah, you have a lot more shares being borrowed, you have shorts being trapped on all of these different moves, very precise moves that are testing like EMA levels and whatnot. And so the question is like, why would you do it again? Well, one answer could be maybe you want a double bottom, but this is not a double bottom, not really. Another answer would be, well, maybe you need more, like you gotta shake out more long positions and accumulate more and get more shorts on board. I could see that, but the thing is like this region was not an easy region for them to penetrate. This was a very difficult move. It happened after hours. It defended this region. And then when it was done and it got this last little spring, I mean, it just shot off. And I would say it did so in a way that, to me anyways, was very convincing of a move, like another move being set up. And then also, you've got this head and shoulder pattern, and moving away from, just like in this case, right? If you were to move away from this, you basically, in some regards, you almost eliminate your head and shoulder. Now, that being said, I did some stuff with bars patterns. I'm not a big fan of bars patterns, unless I'm just doing a simple comparison. But yeah, I mean, basically, if you had a sell-off here, right, it could do something like this and come back and test this region for that double bottom. Yeah, and I could see that certainly as a possibility, but I also don't really know, again, if that really makes any sense at this point, because you already have the spring, you tested the spring action, and you're also wasting time. And I know that could be part of the goal here, is to just sort of get people bored. But that's kind of like the only main bear scenario I can think of right now that makes any sense, would be to sort of fill out the head and shoulder on this lower trend, and then also maybe retest that $24 or whatever it was. I'm not going to say it can't do it. I just think that this right here is a micro fractal in a bigger picture macro, and just because it's happened in the past does not mean it needs to happen again. And in all reality, this whole fractal right here, we could see it play out in the morning. You could get like a sell-off and like a push down, all right? And then immediately, and I know this is not just the morning, I'm making this way too stretched out, but you get what I'm saying. Like, this type of action can happen very, very quickly. These are springs. This right here is a spring. This is a spring. This is a spring. This is a spring. These actions have tons of microfractal iterations inside of them, and they're compressed, right? So just because this took a long time to play out and looked a certain way and came below a certain level, it just doesn't have to happen that way again. It could very much be that this is the double bottom, right? And that's all you see. I'm not going to say what's going to happen in the morning because I just don't know, like first thing. I think you're probably more likely going to get a bunch of shorts piling on as they do, right? They're going to be trying to push it below the EMA. I think it's like the 200 or something like that. Again, if you haven't checked out Father's stuff on Twitter, check them out. Really good Wyckoff stuff. But also, I'm looking at this and I'm thinking about that T3 that we talked about, right? And we examined the T3 in the previous video. I'm not going to do a full-on examination here, but specifically, this one right here. I mean, this has kind of been my bread and butter fractal just because it's easy to read. And you can see this motion with this push up and another push up is very, very similar. And you do get a bit of a spring here, right, that propels you below the previous level. And you can see there's actually what looks like another test right there to create a double bottom, and then it pushes below. And that's exactly what we got. We got the test, looks like a double bottom, and then it pushes below. All right, before coming up, and then it starts to move. And in terms of the volume patterns, again, I did it in the previous video. I'm not going to do it on this one, but it's very similar. I mean, it's a very similar volume pattern. So while there is a compelling case that could be made, I do believe this right here, this section that we're seeing, okay, right here from, I mean, it literally happened in like a day. It wasn't, I think it was a half day almost. This is the same fractal that we see play out on a macro scale, in this region, this push up, another push up, and down. And you can even look at it this way, a push up, right, another push up. Of course, in this case, this one didn't come below. But yeah, I think this little pocket, and this tiny little pocket right here are all the same. And the reason why I can say that is because we've been examining these things for like a month, and we know that the bottom of these all look like this. They all look like this sort of upside down, well, I guess in this case it's not upside down, but this M shape. And they all have the same marker on the bottom. It's just sometimes that this is very, very compressed. And it's tempting because it's easy. I'm going to open this up. It's tempting because it's kind of easy. I don't know how messy this is going to be. To say that, no, it's got to be this region because it looks the same. And so you could take a bars pattern and you could say, oh no, it's like this, or no, it's really like this. And I agree. Like, you take these bars patterns, you look at them, and you're going to see that there are similarities in the way that this has moved. And it's almost too easy, right, to say this is how it's got to be. So therefore we're about to get some big move, but that's not the way that stocks work. Just because it's happened in the past doesn't mean it has to happen again. And yeah, like those are very similar moves, right? That's the one. Here's the other one. This is the one that other folks are arguing. They're saying, this is it. We're right here. And I'm like, yeah, maybe. It's upside down. I'm never going to be able to get it right now. Like, got to be pixel perfect. All right. Well, you get the idea, okay? Where this is like that push up. And I'm more in this camp, if any camp. I do think that it tracks better to this previous time frame. I did it in another video, and I felt like this is the better track. However, there's a major difference here, which is that while you do get the head and shoulder down into the little accumulation and a push out, this move, while it looks pretty similar to this, there's some key differences. Number one, when this pushed up, it continued to make higher lows. And this one did not. It started to move down very quickly. And then it kind of breaks that patterning that we see. And then in addition to that, there's another major difference here, which is that this is the head and shoulder pattern, which means that this is where the R1 occurred. And if you look closely, you can see a T3 is present. However, as we've already kind of talked about, we did get that spring into a macro T3. But we never saw the actual head and shoulder trigger, which is in the region between 32 to 34, basically. And so this could not have been the complete R1, even though it has a major move. Okay, I'm not convinced that the R1 is finished. It could be partial, but I don't think it's finished. Another thing that I wanted to note is that if you were to look at, let's say, this region, which is the region I've been tracking, and let's say you did a bars pattern here, you could also say this is the same and make a pretty convincing argument. Okay, you see that? You see where I'm going with this? Okay, so just because a bars pattern matches in a range that you prefer, for the move, doesn't mean that it is the correct sequence. It's not going to work out exactly the same every time. Okay. Another thing I wanted to know is that on this particular one, if you're looking at this region, this actually makes more sense because after the sell-off, you get a major move up into a T3. Take a look at this. Get a major move up into a T3. You get that little upside down Dorito chip. Then you get the push down right here. All right. And then you get a spring right here into the T3, which is this. This is what our hypothesis is. So if you look at everything up to this point, it leads you to right here. And then this next major move up would be your T3, which typically sets up right beneath where we would expect it to have a breakout onto the head and shoulder. So I'm looking at this more in terms of how would we get from A to B if it did move up? How would we get from A to B if it did move down? And right now, what I found is that this region, this is a T3, a T3, a T3. This is a walk down. This is a 1, 2, 3 walk down. And then, while again, I think that there's definitely possible there could be a spring in the morning. If it were to continue to move up after that, I'd be looking at these specific ranges because I believe that these are going to help be liquidity triggers. And then once you get past these 1, 2, 3 right here, then you're moving into this range, this region. And I'm trying to figure out if it's going to be at the base here or if it's at this particular level. But from what I can tell, comparing to other head and shoulders, it's typically like this whole region. And that would make sense because if you look at where we stopped, we actually stopped right there. We have 4 or 5 touch points. This was just a single couple bars that ran up to 32. Just to sort of establish this trend line here. All right, and now it's important. Now that trend line has been established, it's important. Now that 32 has been tested, and that's a key level, then we look at the whole range and we say, okay, well, really it was sort of stopping here, right at 3150. And if you come back over, this is right where we saw all those segmented fractals. So if it's done the same thing that walk itself down and we get these little inverted head and shoulders on the way up, right, as we step up, then we create that nice bowl. We get the little cup and handle, if you want to call it that. It's really ugly. But more so, I wouldn't even say that's a really legit cup and handle. Maybe this part of it, right? But not this first part. Really, you're getting this inverse head and shoulder on the micro, and then on the larger scale, you're getting the larger head and shoulder. And presumably, this is where we would be looking for that shoulder to move to. And what's interesting is that if you look at, let's get rid of, well, no, let's leave it. If you look at this widening channel, you see how everything kind of works really well together. If you look at the widening channel here, it intersects where this arc presumably is, which is also the intersect of where this level of support is, right in this region, right around $30. The top hit here is basically this 3150, which was another key level. So that would be a rejection, right? Then down to 30, retesting this widening channel here, right? So this is an inverse head and shoulder. Then you've got another one that's formed on this shoulder. And then the push up here actually works in a couple ways. You can look at it as this widening channel, or you can look at it as this somewhat narrowing rising wedge, and there you go. So this would be 1, 2, 3, 4, 5. Of course, you wouldn't have 5 be bigger than the other, but you get what I'm saying. Perhaps we have a break somewhere in the middle there, or maybe we go up to 32, we get an ABC and then move up. I don't know exactly how that works. Or maybe if it's part of a larger wave, it doesn't matter. Not a huge Elliott wave guy, so don't quote me on that. But my point is that maybe wave 3 is the biggest, right? And we just kind of break through, come back and retest 32. It doesn't really make any difference to me. My thing is just that if you look at where these key levels are, this actually fills out more than one. And the other chart that I made, very similar. This is the one that I was looking at specifically, the head and shoulders that could form, like the Wyckoff and the microfractals that would be used to accomplish the Wyckoff. And this being a T1 into T2, this would be your little head and shoulder, and then T3, right? So this is a little different than the other one in terms of timeline, but the major actions are the same. And then I've got the Bezier curve. We're running out of time on that curve. I wanted to talk a little bit about that. Basically, I've learned that the Bezier curve, the 210 bars, it's mimicked from one side to another. So this one needs to be shortened quite a bit. I think I did it right on the other one. But yeah, this could be more like this, okay? But essentially, like, this pattern appears in various places on this stock, and it's typically, I guess I have it on here. Here we go. From the base of the lower left base of the head and shoulder pattern all the way up to the top where the distribution starts. And this curve, again, it tracks pretty much 1-to-1, where you have the same distance from this point to center to this point. And you can see that they're equal distant. And this particular marker typically is a liquidity spike that happens right at the beginning of like the mountain, like the main part of the T2 fractal. Not always, but it's usually pretty close. So the reasoning for why I drew it the way I drew it here was that I think if you're looking at that part of the fractal, you can see that that's where it is right there. That was the marker. So this is more or less just a test for me, but if it is the case that it is that quick, then we would see it move pretty fast, like within this week. I'm talking about like a few days. And then after you kind of get past that point, it's very possible that the threshold for this goes away and that we no longer could expect it to do the same thing. Like, it's possible that we stay below it, for instance, and walk up and down more slowly. That certainly is a possibility. But yeah, the window for this is getting smaller and smaller and smaller. And so, yeah, I'm seeing this as a T3 setup this week. I'm looking for volume on Monday. If we don't see the volume come in Monday or Tuesday, then yeah, maybe we could throw up some flags and we would have to look at what's going on. But anyways, that's it. Hope you all have a good one, and I will talk to you later.